Hey, what's up? My name is Sam and my goal is to find companies that are worth investing and can double or triple my money in short span. Today, I want to talk about a company called Peloton. I'm going to reveal the price I paid for this company and what do I think is a fair price for the stock right now, and why I think it can be a great addition for anyone's portfolio. I'm constantly looking for new companies that can be the next Tesla or Amazon. If you do enjoy the video, please smash the like button and don't forget to subscribe for more videos. Thank you. As I'm making this video, Peloton stock is around $48 per share. For those who are not familiar with Peloton, Peloton is the largest interactive fitness platform in the world with a community of over 2.6 million members. As of now, Peloton has two connected products, the bike and the tread, which sells around $2,000 and $4,000 respectively. They also have a digital platform membership for $12.99 per month. Peloton's online platform is basically the Netflix of workout videos. Using Peloton's mobile application or website, you can watch live classes, pre-recorded classes, track your progress, and join challenges. In addition to all of these, they also have an online store to sell branded clothing and products. For Peloton, there's a massive market opportunity, and Peloton, in my opinion, is well positioned to be the leader and disruptor of the health and wellness industry. You might ask yourself, how big is the health and wellness industry? In 2018 alone, US fitness centers made around $32 billion in revenue. Worldwide, health and wellness industry worth around $4 trillion. Right now, as I'm making this video, Peloton's revenue for the current year is forecasted to be around $1.7 billion, which is 5% of US market and 0.4% of worldwide health and wellness spending. As you can see, the growth opportunity is huge. Now let's look at how Peloton grew its revenue and what is the percentage change in revenue. Peloton has been growing its revenue by double digit every year. Although it seems that the growth has been slowing down, but that is normal since the revenue is estimated to skyrocket to around $1.7 billion in 2020. Even at this rate, they are expected to grow their revenue by more than 40% next year. From 2017 to 2020, Peloton grew its revenue by over 98% compounded annual growth rate, which is very impressive. In terms of gross margin, Peloton was able to keep it steady above 40%, which in my opinion they should be able to improve it further in later years as they increase their user base and accumulate content. In the current year, Peloton has been improving its balance sheet by improving its adjusted EBITDA margin. The adjusted EBITDA margin has been improving each quarter from negative 9.2% in Q1 to forecasted 11.8% in Q4, which in my opinion is a significant improvement. Now let's talk about the evaluation and price target. Obviously, this impressive growth and improving balance sheet does not come cheap. As of now, Peloton evaluation sits around $12.78 billion with a price tag of $48.42 per share. Since Peloton does not have a positive net income, I'm going to assume 15% net income to estimate the price target based on PE of 20, 30, and 60. I will also compare Peloton with other high growth companies such as AMD and Amazon. As of now, assuming you buy the stock at the current price, Peloton trades at a PE of 53 for this year and PE of 38 for the next year. In my opinion, the price will hover between $27 to $54 this year, and it will be around $38 to $76 for the next year. Now let's compare Peloton with other high growth companies such as AMD and Amazon. As you can see, Peloton's year-over-year growth is forecasted to be 87% for this year compared to AMD and Amazon, which is supposed to be around 19 and 22% respectively. With this impressive growth, you would think Peloton should be more expensive considering it's experiencing higher growth than Amazon and AMD. However, if you look at the PE ratio metric, Peloton looks way cheaper than Amazon and AMD. I've been watching Peloton for a while now, and I bought a few shares right before the price jump of 45%. My average is around $33 per share, and I was hoping for it to go down so that I can buy more. However, the stock price took off right after a successful earnings call, which was fueled by revenue beat and a significant increase in the subscribers count. Peloton grew its connected subscribers and digital subscribers by 94% and 64% respectively. So, the question is, should you buy the stock at the current price? I would say either wait for a dip, or if you're planning to hold the stock for the long term, definitely start the position, and if it goes down from here, add to your positions. As I mentioned in this video earlier, I'm forecasting the price will go up from where it stands today because of the pace that Peloton is increasing the revenue, subscriber count, and adjusted EBITDA. If you like the content, please don't forget to subscribe and like the video. It will help me to grow my channel. Don't forget to add your comments below and tell me if you're buying the stock or you'd rather wait a bit longer for a dip.